Hello traders out there in Traderland, D7 here with Grok Trade. This is stock market highlights from this past week that the record-setting rebound, the S&P 500 rebounded from a 5% pullback. The major indices rallied to record highs with the Dow Jones hitting 40,000 as inflation concerns eased. The S&P 500 posted a 4-week winning streak nearing all-time record highs. Top gainers here, the S&P 500 gained 1.4%, the Nasdaq 100 surged by 2.12%, Dow Jones rose by 1%, Russell's 2000 climbed by 0.79%, lagging all the major other indices. And we're going to take a quick look here at the markets, and we're going to first look at the dailies, we'll go to the weeklies and then the monthlies. So the daily chart on the S&P 500, I want you guys to pay special attention to this. We got a rising wedge at major resistance right now, and we are at these highs, okay? But major resistance on a rising wedge after an extended run, okay? And we have a bearish divergence on the MACD, and the RSI right now is in overbought territory, okay? So that's telling us we have a lot of opportunity to drop now after this rally we've had the last couple of weeks. The diamonds, if you look at that, up, making new time highs, and we're going up here, but you can see the MACD going down, bearish divergence, and we are overextended, overbought in the markets on the daily chart. The Nasdaq, the Qs, taking a look at this, up, we smash our head at resistance. Right here you can see it, and we're right there. We're trying to catch the breath. We're heading higher here, but lower there on the MACD, bearish divergence, no good, nearing the area of being overbought on the RSI. But the Russell's 2000, if you take a look at this, you'll see we're up. We didn't even get to resistance. You see that? Relative weakness, bearish divergence here, not at relative highs. We're up there near that area of RSI on being overbought, but not quite there. Look here at the financials. Up, had 2 weeks of going straight up, very nice, at just getting past this area of resistance, MACD, bearish divergence, and we're here at being overbought. US dollar, if you look at this, we're down, broke a support line, and now we're heading lower. We're below all major moving averages now. On the US dollar, gold had a nice rally, up. We are now just slightly above these recent highs. If you look at this, we're getting ready to get into the overbought area. And if you look here at silver is on fire. CPI, inflation ticked lower. For that purpose, you're seeing something that's very interesting with silver going straight up. So, and on big volume. So if you're looking at this, one thing I would be doing is putting a 6 EMA on that. And if you get a close below the 6 EMA, be looking to take profits. But you got to be very careful with that. We will be looking at weeklies coming up here soon, but the VIX, the fear is down, almost at oversold territory, but we're coming to some major support levels. Bitcoin on the daily chart is up at an area of resistance. Now, let's get to the weeklies. The weekly chart, and we're going to start off with the spider. If you look at this, we closed over a resistance line. We're in a rising wedge, guys, but we closed over a resistance line. That is really strong for that to happen. The diamonds, if you look at this, we're still in a rising wedge, but we're heading higher. Not too bad on the weekly chart. The Nasdaq closed over a trend line. Very good. Now, here's the big thing, guys. If we close back next week below it, that could be a jab. A jab means very bearish, meaning that it closed above. It broke the trend line, then it came back down. If it does that, that's bad. On the diamond, same thing. Or on the S&P 500, the spider, same thing. This past week, we closed over it. Great. Now, next week, if we close back down, that will be a jab bearish, and that would head southbound. So if I go over here to Russell's 2000, I want to show you something. We're at major area of resistance. If we look at the trend line on the weekly chart, we have a hit back there in November 2021, and then another major hit here in March 2024. And guess what? That's precisely where we're at right now at major resistance, meaning that we should go down, not up. But if we break through and we blast through this, look for a big run going into the markets. However, We're at major resistance. The dailies are way overextended. This would make sense on the weekly to come down. But again, I got to show you on the spider. Guys, we closed over the trend line, but if we get a red week this next week, that's going to be really bad going into the next few weeks. Do not let that be lost on you. If I go to the financials, same thing. Financials closed at the high for the week going into Friday, and you can see we closed over a major area of resistance, and this resistance goes way back, man. I mean, this is a big weekly line, but if next week we get a bearish, that'd be a bearish jab, and if we get that, look for that thing to crash. So we're watching this very, very closely. Now, I want to be clear here. Because we closed over those should continue higher. My concern, though, it was the small caps were at major resistance. Small caps tend to lead the markets, not lag. So right now we're seeing it at resistance when the S&P is over it, and we're seeing that we have the financials over it. If I go back here to the financials, it's over resistance. It is woe to the markets if we close bearish next week and we close back below these lines. Okay, so be watching that. US dollar, if you look at this, we have the makings of a bearish death hook. We got our symmetrical triangle, we broke out, and now we close back in it. Guys, this should signal a huge sell-off on the US dollar. This should start heading southbound. This is a death hook, and this has a high probability of going down. If the US dollar drops, which is technically should do, then that should make it really bullish for commodities such as gold and silver and for equities in general. Speaking of gold, let's go to gold. Gold up over a major weekly trend line. It needs to stay above that to stay bullish. It needs to. So let's watch that. Silver, huge run up, $29 mark. Very, very good. VIX at a major area of support. You can see it here on the weekly chart. Major area of support, VIX. That's the fear indicator. So if they're saying that there's a good chance of fear getting ready to pop higher, guys. And on Bitcoin, you look at this. This is a big buy opportunity on the weekly. Down. Bitcoin giving us a big bullish harami. And this is been engulfing pattern. So this is a rather engulfing pattern. Bullish engulfing pattern is what I was talking about, not harami. But this is saying that we're going northbound, guys, is what it looks like here. All right, now quick look here at the Russells. We're going to start with the spiders actually, but we're going to go to the monthly. So here's the monthly. Now it's very important that you understand that the higher time frames, the monthly is more powerful than the weekly, and the weekly is more powerful than the daily. So what am I saying here? What I'm saying is the monthlies that we're looking at now trump everything else that we just talked about. Okay, so the monthly, if you look at the spider, we had 3 months ago bullish, and then last month bearish. We were way down 5+%. This month so far in May, we are up. The question is, can we close back above that line? We have a bearish divergence here. See the red line going up. We're making higher highs on price action, lower highs here on the MACD, lower highs here on the RSI. Rising wedge with bearish divergences usually is bad, bearish. But we're in an election year, and we seem to be going bullish. And you look here at the diamonds. Let's go there at the Dow. Same thing, big red, and then boom, up. But look at this. We're at major resistance. Will we sell into that resistance on the monthly chart? We could. Something to watch for. Nasdaq. Look at this. Boom! Over an area of resistance. We're there, but will we close below it for the month? We have to watch that. Russell's 2000, we're at major resistance. The Russell 2000, we're at major resistance now. So that's no bueno for the bulls. There we are. And then we look at financials. The financials, we got up above this area of resistance. We have bull, bear, bull. So we are building a high base above this area that could get bullish going into the future. A lot of times what you'll see is this railroad track where it goes bullish, bearish, bullish, bearish, bullish, bearish. Usually when you get that back to back like that, it's more bearish than it is bullish, but we are building a high base, which is more bullish than it is bearish, okay? So I'm throwing a lot at you here, and you got to look at all of it together. You want to look at big time frames to smaller time frames in that order. US dollar monthly, symmetrical triangle. We broke out, we came back in, death hook. US dollar looks really bearish to me. And then here the gold is just up, and away. Very, very good, very strong, looking good. Silver, same thing, up, and away. But usually after you get a run like this, look to be taking profit soon, okay? Or at least be guarding them very, very closely. The monthly chart on the VIX, major support. We're at below 12, guys, on the VIX. In Bitcoin, if you look at that monthly, last month was bearish, this month is bullish, and this is looking like it could, in fact, go bullish. All right, there it is. I give you the daily, the weeklies, and the monthlies on all major market indices, and plus some, we did some commodities here, and we also looked at fear. If this was beneficial to you, at least give me a thumbs up. And this is, frankly, to be said, your last video you'll ever see from me if you don't hit subscribe. Remember, if you haven't subscribed and you do like this information, it's worth doing so. You can always unsubscribe. It takes no effort at all to unsubscribe. But guys, I appreciate all of you. So here we are. Let's just have a little mini chat. This is my monologue. And so I just want to let you know that we are we have a lot of people going through the assessment. If you haven't gone through that at Grok Trade and scroll down to the little test, it's a little assessment, trader's assessment. That will tell you if you have the makeup of what it is to be a trader. Guys, we've been trading and teaching for many years. I've been trading almost 30 years now. Trading 30 years, 27 years. And we have been teaching 20 years, something like that. What is it, 27, 20? Yeah, right around there. So I started trading in 98, whatever that equates to. And then started seriously teaching and mentoring around 2004. And then 2004 on, we just been mentoring thousands and thousands of people. And I don't know, you guys are crazy. I don't know how you find us. I mean, seriously. You find us, and we don't market, we don't advertise, we don't do anything, but we crank out some serious traders here. This is where someone goes from a gambler in the markets to become a serious trader. And have a class the first, second, and third. If you want to join the Zoom class with us, the first, second, and third, fill out the form on mentoring, and we'd be happy to talk with you. But we have the 101s what's shocking is how many people are coming in and consuming the 101s that we have. The 101s are for people that are wanting to learn how to trade, don't know much about it. What's the difference from bullish and bearish? What's the difference from an ETF and a mutual fund? What's the difference, right, from an exchange and a broker? Those type of things, that's what the 101s teach. It really gives you the basics of what it is, what trading is all about. But what we're most geeking out about is the trader's assessment. And it's an aptitude test is what it is. And what we did was we took what we had learned in our nearly 20 decades of teaching traders and training them and saying what makes the good traders. Because wouldn't it be great if I could say every student that came through was a massive success? Some students quit their jobs and become full-time traders that come to our program. Others will tread water. And the question is why? I'm thinking ethically here with you guys, but the question that we always ask ourselves is why do some kill it in the markets and others just don't? They just tread water the rest of their life. But they have the same mentors. They had the same specialized knowledge delivered to them. They had the same guidance and support. So why do some kill it and others not? So we broke it down to two things. One, that the ones that are successful are very disciplined, and those that are very successful have a high emotional resolve level, and they're not tossed to and fro via their emotions, fear and greed. And so that's the students that are the best. The ones that we really hope to get are those that are highly disciplined, meaning that they're disciplined beyond the norm. And those are people that aren't highly swayed by emotion and sucked into the vortex of the fear and greed. And if we can keep fear and greed out of it, then the clarity that comes with that And that, coupled with discipline, really puts you on the path of reaching your full potential as a trader in the markets and trading with great confidence in the live markets. So the trader aptitude test attempts to hone in on those individuals because I think that we have this intrinsic desire for students to develop faster than all the other students out there and to make more money than all the other students out there. And the only way to do that is to hone in on the students that have the best makeup and skill sets to be able to be, true Grok stars, true rock stars out there in the marketplace. So very interesting stuff. We're kind of getting into the science side of that. I don't know if you guys read the book by Mark Douglas, Trading in the Zone, but it is a great book. And Alexander, so there's those two authors, very, very good, where you can have a better understanding of the psychology of trading and what we deal with, which is half the battle. We can teach you everything you need to know to kill it in the markets, but it's funny how some people will find a way to lose money at it, right? And it's why does this section of people find a way to take a winning system and to bastardize it in some way? So very interesting, and I wish I could put a chip in everybody and say, now you have great discipline, and I'll put another chip in you, now you have great emotional resolve, and you have those two things, we'll take care of the rest of it. Let's lock arms and let's do something special in the markets. So anyway, very fascinating things. Had no idea this is what I was going to be opining on, but here I am doing so. So take care, guys. If you like it. And if you made it this far, say made it in the comments, because only you and I and the other people that made it will know what we're even talking about. Take care. We'll see you. Hopefully you can join us June 1st, 2nd, and 3rd through Zoom. We'll talk to you soon. Catch you later. Bye. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle in with being guided by a mentor, let finances be this. If you're a trader, you from amateurs to professionals. Mentoring will do that for you. Anyway.